You're watching Business Incorporated live from Channels HQ. Coming up, Ghana is set to swap cedi debt for new bonds in restructuring efforts. According to the latest World Bank Migration and Development Brief, Nigeria recorded stronger remittance flow of $20.945 billion in the year 2022. Plus, Kenya private sector activities improved to 50.9 points in November. Great to have you join us. I'm Ladi Williams. First off, let's look at how the markets are looking at intraday. Starting in Africa, we see it's mostly mixed sentiment on the African continent there with South Africa. Right there in the green, up 1.37% at 75,338 points. And earlier, when we took the Nigerian market there, was up 0.44%, looking strong at intraday. Other markets we track there, we see Egypt, they're up 1.71%, and Kenya closing on Friday down 0.35%. Well, let's get some intraday activity details now on the NGX. We have join us Abdurrashid Momo, equity trader at TRW Stockbrokers. Join us via Zoom. Great to have you in the program.
Very much, Ladi. Good afternoon.
Yeah, so last time I checked, the market was up about 0.44%. How's it looking right now?
The market is still up, but the percentage has dropped 0.25. That was 118.52 change. Basically, most of the major index, that's NGX SI, is up, and the NGX 30 is down. There are other. Actually mixed. It's a mixed index. We have the gainers and the losers. So far, the most affected is actually the premium board. All the premium board are all in red. No premium board is in red. That's Access, Dankstem, First Bank, MTN, Seplat, TBA, WAPA, and Zenith. But one good thing is that we have presence in terms of volume. So investors are not really looking into price appreciation, but more of we are seeing a lot of activities within this area. So I call those one more of accumulation of shares. You know, I always tell you guys that we always have two players in the market: the trader and the investors. So the investors are beginning to see value in what they are buying now. So that's why we see a lot of activities happening within this sector. But in terms of pricing, breakout, we have not seen anyone, unlike what happened last week. So I think we need to wait and see what happens next.
And I remember the last resistance trend line you sent to me the last time.
Yes.
The resistance was about 47,604 points, talking about the all-share index. But now we're at 48,000. Have we broken out?
Yeah, we have broken out to some extent. You know, I said if there's a breakout, then the next target will be about 50,000 points. 50,000 points have always been a form of trader line for the market. Despite, like, if you see what's happening now, I just know that the premium body is down, but there are some stocks that are heavyweight. And anytime they sneeze, it affects the overall of the market. Like I always tell, stocks like Nestle, MTN, Boa, anytime there's a movement within those stocks and every other stock is down, we always see that prices will always change. As it is now, why we are seeing red is because most of these stocks in the premium board are within resistance level. They are trying to break out and see whether we are going to be in a new trend or not. But by the side, the NSE is already forging ahead. Perhaps with time, those stocks will move. The 50,000 points will be, it will gladden our heart for the market at the end of the year. From where we came from I think the period of April, the market has been down. And we just seen bull rallies for the past, I think, a month or so. So we hope that the the market's in red, which coincides with Santa Claus in red, but we pray that at the end of the day, at the end of the year, the NGX smiles for everyone. So it will be a win-win for everyone.
All right, still looking at today, how do you see the market closing?
Well, the market is going to close up because, as I said, the index are mixed, but NSC, NGX, ASI is already on the uptrend. So it's too early to call, but I think basically the market is going to close up at the end of the day. It's going to close up at the end of the day.
And what stocks are you watching, that you think will outperform this week?
Guinness is up by about 10% already. If Guinness moves, there's no how Nigerian breweries not follow suit. I see some stocks within resistant levels, and especially the banking sector. I'm seeing a lot of volumes happening in that sector. We expect really, if it can cross through those levels, we're going to see breakout. One is First Bank. We are seeing volumes on First Bank. We are seeing volumes on the Lafarge, GT, UBA, Zenith. Those are the top. Those are the four actually topping most traded so far. Not too large, but we are seeing a lot of activity. So these are areas, these are the stocks actually watch this week.
All right, we'll be watching out for those stocks. Thank you so much, Abdurrashid Momo, FC Trader, TRW Stockbrokers. Thank you so much.
Thank you very much. Yeah.
All right, now let's move on to other markets we track now. Talking about the Middle East, there we see sentiment in that market looking quite mostly negative today, right now, but it did close positive last week, and we're seeing some positive sentiment in the UAE. With markets we track there, Abu Dhabi is up 0.91%, Dubai 3,352 points, that's up 0.84%. Let's look at other parts we track there. We see is negative sentiment with Saudi Arabia and the Qatari index both down at intraday. Watching out for how those markets actually close at the end of trading today. Let's move on to Europe now. Obviously, the price cap on Russian oil, as agreed by the European Union, G7 and Australia, is coming into force today. It aims to restrict Russia's revenue while making sure Moscow keeps supplying the global market. Well, let's hear more now from Chris Koba right there in Berlin. Great to have you, Chris. So how is the price cap intended to work right now?
Now, this cap allows Russian oil to be shipped to third-party countries using G7 and EU tankers, insurance companies, and credit institutions only if the cargo is bought at or below the $60 per barrel cap. And that is the leverage that the West feels it has here, as the G7 nations, Canada, France, Germany, Italy, Japan, the UK, and the United States provide insurance services for 90% of the world's cargo, and the EU is a major player in sea freight. Now, each EU and G7 state will have to monitor companies based in its territory. Now, if a ship flying the flag of a third country is identified carrying Russian oil at a price above the cap, Western operators will be banned from insuring and financing it for 90 days. The West has adopted the cap well above the current cost of producing oil in Russia. Nevertheless, Moscow has been scolding the decision, and major customers like China and India are expected to continue buying from Russia, even if market prices should increase beyond the cap. Also, the 27-country European Union imposed an embargo on Russian oil shipped by sea. Now, these maritime shipments account for 2/3 of the bloc's oil imports from Russia. Technically, it came into force after adoption at the end of May, but the decision allowed for a transition period for EU members to phase in the ban.
And Chris, why has it been so controversial to agree on this cap?
Because Russia is the world's second largest oil producer, and even in times of an unjustified and illegal war, Russia's position as a major global supplier of crude needs to be taken into account. Also, a cap set at this level would provide an incentive for Russia to continue pumping crude. It'll continue to earn revenue even if it is reduced, the proponents of the price cap say. It's not yet clear how much Russian oil the sanctions could take off the global market, which would tighten supply and drive up prices. Although experts say that Russia itself would be interested in maintaining the state of its infrastructure, which would be damaged if production is halted, and keeping the confidence of its customers. And then there are those that feel that this price cap should be much lower and that the limit of $60 per barrel does not curb Russian wartime revenues enough. According to Ukrainian President Volodymyr Zelensky, the cap would do little to deter Russia from waging war in Ukraine. Now, the impact of the measures are still pretty much up in the air. That's probably one of the key reasons why OPEC and its allied oil producers didn't change their targets for shipping crude to the world economy. The Kremlin has criticized the decision. Russia's deputy prime minister, who is in charge of energy issues, warned that Russia will not sell its oil to countries that would try to use the cap. Russia has already been rerouting some of its shipments to China, India, and Turkey. And also there have been reports that Moscow is trying to put together a shadow fleet of tankers in an attempt to circumvent the modalities of the price cap.
Keep watching how it impacts the markets. But how are the markets in Europe looking?
Well, investors will be keeping a close eye on crude prices, of course, which are slightly up this morning. Also, traders welcomed more easing of strict COVID containment measures in China. The moves helped offset a forecast-busting U.S. jobs report that dented hopes that the Federal Reserve will take a softer approach to hiking interest rates in its battle against inflation in the United States. Investors will also be watching fresh data coming from purchasing managers' indexes, ahead of which caution is the name of the game. The DAX in Frankfurt shedding around 0.5% this morning.
All right, we'll keep watching out for those economic data there coming out from the EU zone. Thank you so much. That was Chris Koba right there in Berlin. Let's move on to other markets. Now, we see shares in Asia-Pacific rose. There's China relaxed virus testing rules in some cities, signaling more easing in the nation, which has been under strict COVID-related restrictions for more than 2 years. Hong Kong's Hang Seng Index rose 4.51% to close at 19,518 points, leading gains in the region there. See behind me there, it's all green in the Asian market. Shanghai, 3,211 points, up 1.76%. We see HSI there, 19,518 points, up 4.51%. Nikkei in Japan gained about 0.15%. We see Kospi down 0.33%, and Australia there, the ASX 200, that's down 1.84%. We'll keep tracking those markets to see how they close today. Let's move on to the Wall Street now. We see investors await more economic data ahead of the Federal Reserve's December policy meeting later this month. See the Dow Jones Industrial Average futures, that's dipped by 127 points, while the S&P 500 futures there, we see that's down 0.46%. Tech-heavy NASDAQ, 11,972 points, still holding that 11,000 level. Might get back to that 12K level, down 0.32%. Talking about the U.S. futures markets there, but looking at watching out how those markets actually close today, with investors worried about what the Fed is going to do next. Let's move on to other markets now. We see oil prices edged up after OPEC Plus and nations held their output target steady ahead of the European Union ban and a price cap kicking in on Russian crude. Same time, in a positive sign to fuel demand, all Chinese cities eased COVID-19 curbs over the weekend, though the partial easing in policies sowed confusion across the country today. While prices rose as much as 2% early in the day, both Brent and US WTI contracts have since paired some gains. All right, that's it now. We'll take a break. When we come back, more stories from the African continent. Do stay with us. This is Business Incorporated. Welcome back. You're watching Business Incorporated live on Channels Television. So our next conversation now, we see Kenya's inflation inch lower to 9.5% year-on-year in November, down slightly from 9.6% a month earlier. We have Mercy Millinoy, our business analyst from Kenya, join us via Zoom. Great to have you on the program.
Thank you so much, Lady.
So what do you think drove this deceleration in inflation rate in Kenya? Is it real, or is it just following the trend we're seeing in the U.S. and Eurozone?
Well, 2022 has been quite a significant year for Kenya. And of course, we're simply recovering from COVID. At the same time, the country is facing one of the worst droughts that we've had. So thanks to the effects of climate change, the rains have not come when they're supposed to come. And of course, this has really affected the production of food across the country. We have hundreds of thousands who are facing the effects of drought in a really hard way. So of course, because of the lack of rains, the inconsistency, it has led to a decline in food production, which means the prices of food have really gone up. Also keeping in mind, we are just from a political transition. So of course, this affected a bit in terms of economic activities in the country. But of course, now for the inflation, we are not cushioned from the effects that are happening, of course, with Ukraine and the wars, and of course, even with what is happening majorly in the global scene has also greatly affected the economy of Kenya. And of course, now we are seeing the cost of things are really going high. And of course, despite the fact that the inflation rate between October and November reduced by 0.1%, still the cost of food is really high. If you look at some of the food products like wheat flour, maize flour, they went up by 38.2% and 30.9% for maize flour, which is quite a staple food here in Kenya. The other things that have really pushed inflation really high, of course, this year we have really experienced the high cost of fuel. And of course, if you look at the prices of diesel, kerosene, petrol, they're all up by more than 30%. And of course, before this, the government had a subsidy program for the energy sector. And once the current administration came in and halted the subsidy, of course, now the Kenyans are not cushioned from the high cost of fuel. But it's been fluctuating a bit. But if you compare the inflation rate between November this year and November last year, of course, the cost of living is quite higher if you compare the numbers a year apart, Ladi.
Yeah, quite high. Prices still, elevated. I'm sure it's too early, to call it, a trend right now. But do you see the deceleration continuing going forward?
And there's a debate, are we living in a recession? There's a lot of debate going on in terms of will it continue? Will it stop? For now, of course, now we are seeing there's a bit of rain, so there's a bit of hope in terms of food production going forward. If you look at also, there's been the debate of bringing on board of approving GMO foods to ensure that we are food secure. And also there's been the big debate of the government allowing importation of maize, which is consumed a lot, both for human and of course for animal feed production. But in terms of the trend, we are hoping, at least for the analysts, they're hoping that once the economy stabilizes a bit, and of course now that you're moving away from the heavy political season that you are in, then probably by mid-year, then probably the numbers will be a bit more friendly. But also, looking at what is going on in the global scene, it is equally affecting us. But of course, from the government, the current administration that has taken over, they are quite positive that the economy will be able to recover, and the cost of living will reduce significantly, probably by mid-year. But if you look at also the Central Bank of Kenya, they've been taking measures to see how they can be able to balance it out. Unfortunately, also this has really led to the increase of lending rates. A few weeks ago, when the Central Bank Monetary Policy Committee met increased the benchmark of lending rates, saying that, of course, thanks to inflation, global risks that have really impacted the domestic economy. And the last meeting that there was, the rate was increased by 50 basis points. And of course, this pushed up the central bank rate from 7.50% to a whopping 8.25%. And the banks have been implementing this increase in lending rates to Kenyans. As much as, yes, you can access credit, but it's quite expensive. But also the central bank is also just trying to take measures also to ensure that Kenyans are liquid, there's money still flowing. But what is happening is that still the cost of living is quite high. But of course, the authorities from Central Bank of Kenya, the National Treasury, and the current administration, they're positive that soon, probably mid next year, the economy would have stabilized.
And obviously, this would impact, the next rate setting coming up. Do you think this would, make them scale back, on the rate hikes? That's talking about the Central Bank of Kenya.
Well, it's all dependent on the cost of living, really. But what the Central Bank of Kenya is ensuring is that we have enough in our reserves. The Kenyan shilling has not been performing well this year. So also it's ensuring that we have quite the balance of the Kenyan shilling and USD. Of a lot of importation. We're doing a lot of importation from food, from manufacturing. A lot of the basic things in Kenya are imported. So it's simply just to make sure also that we have enough currencies in our reserves, so that also we don't get in a situation where we don't have the basic goods or even the basic raw materials for manufacturing, which in the long run also affect the cost of things. But as of now, it's simply trying to put measures in place to cushion the local Kenyan as much as possible for the Kenyan not to really feel the effect of this inflation. And some of the things that are being done is now opening up of importation of basic goods like maize flour that are zero rated to ensure that they're affordable. The other thing also is to subsidize agricultural amenities such as fertilizer and a bit of equipment to ensure that farmers are able to produce food at an affordable rate, which of course in the long run will be a bit cheaper for the Kenyan. But the other thing also is that also for the government to just ensure that they clear the pending bills, especially on the local level, the county level in devolution, they clear the pending bills so that we have more than enough money that is going around in the Kenyan economy.
All right.
But as of now, they look quite positive. But of course, the central bank will do its part to ensure that we have enough reserves, we have enough currency to facilitate importation, to ensure that we have what we need. But at the same time, now the challenge now is to, of course, to the National Treasury to ensure that money, there's money that is moving in the economy. Pending bills are paid, and
right.
So that's just ensure that people have this money that's moving around the economy to stabilize the prices.
Okay.
But for the monitoring policy committee that met, they say that while the economy is still showing strong resilience, and of course we are recovering and you're doing well. Of course, now we have the Kenyan we have a weak shilling that has not been performing well.
Right.
And of course, we're also importing a lot. So it's simply now in the long term to look at what can be done to balance to balance the import imbalance that we have.
All right.
Do we need to to do more of manufactured goods to export, increase our exports so that we have a clear balance? But as of now, the administration is quite confident, but we are hoping that soon enough we'll be able to recover.
Okay, thank you so much, Mercy Manoy, business analyst. They'll be watching out and tracking that economy, see how it performs next year. Thank you so much.
You're welcome.
All right, now let's move on to other stories now. We see Kenya's Purchasing Managers Index rose to 50.9% in November, signaling a slight improvement in the private sector's health from 50.2 points in October. Rise in headline index was partly due to a renewed expansion in output levels midway through the final quarter of the year. Business activity increased slightly after a marginal decrease in October. Moving on now, we see Nigeria recorded a stronger remittance flow of $20.945 billion in the year 2022, according to the latest World Bank Migration and Development Brief released over the weekend. 2022 figure represented an estimated 4.2% of the country's gross domestic product for the year, a growth of 7.5% over the 19.43 billion reported last year. And Ghana has asked local bondholders to accept losses on interest payments as it restructures its debt to qualify for a loan from the International Monetary Fund. West African country will replace existing local currency debt with 4 new bonds maturing 2027, 2029, 2032, and 2037. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.